Hello, everyone. Welcome back into Crypto's News. It's me, Omar Bam, aka Crypto, and it's time to get back into the swing of things and discuss what is happening in cryptocurrency on a nearly daily level since 2016 and back again. Had a fantastic trip. It was primarily to propose to my longtime girlfriend, Elle, which many of you guys might remember. We've been together for pretty much as long as when I started my channel back in 2016, and finally got around to proposing in wonderful Prague. It was a beautiful trip, and then I needed a little bit of time to recover. I'm still a little bit sick actually right now, but definitely feeling better and super stoked about finally having a fiance. She did say yes, so that's good news. What's going on with the camera? That looks very strange what you guys are seeing right now. Oh man, this is what I'm talking about, getting back into the swing of things. There were always going to be technical hiccups whenever we get started again. But yeah, super happy about that. We're going to be getting back into all of what's going on. I've been following it. So much news. I'll cover some of what I had missed that I think is important while we go forward here. But there were definitely some big stories out there and plenty today. So yeah, sit back, relax as we get started again here with, I guess, another season of Crypto's News. What's up, Josh? Really glad to have you back as well. Thank you for making it out to the live, my man. Really appreciate that. So we're having a nice rebound from the prices, having been so suppressed recently. A lot of concerns around what the Fed is doing, what the president is doing with his tariffs and so on. And we've gotten a shift today, very much. So that is probably what's causing this boost in prices. We're going to look at that in just a minute. But right now we have Bitcoin at $88,050.65. It's up nice 3.5% over the last 24 hours. Looks like it's trying to make another run for $90,000 here. Ethereum is up 4.5%, a little bit more than Bitcoin. It's at $2,085.50. So it has cleared the $2,000 level, which has been a struggle to break through recently. So here's to hoping that we can stay over that. XRP has now started recovering again after some sell-offs following the lawsuit that was dropped by the SEC. I didn't get to cover that on the show, but when it was dropped, the prices rallied insanely for XRP, and by 48 hours later, they were already crashing back down to normal levels. And pretty much it's in line with what's going on with the overall market. It's in the green. It's up 2.7% at $2.46. The strongest performer here, actually two of them in the top 10, Solana up 9% at $142.37, and also Dogecoin at 18 cents and 64 decimal places following that. Well, not 64 decimal. You guys know what I'm talking about. Anyway, we have dominance for ETH still below 9%. It's at 8.42%. Bitcoin dominance at 58.6%. Overall market caps almost again at $3 trillion for cryptos at a gain of 2.1%. Look at these insane gas prices for Ethereum. It's no wonder that you have more and more whales that are seemingly adding to their positions here with things like Ethereum during these recent days where we've had these depressed prices, these deals, I guess you could call them. Anyway, so this stock rallying that is going on today has to do with supposed Liberation Day that is expected to happen on April 2nd. So this is when a lot of Trump's tariffs are being promoted as a kind of Super Bowl day, where that's when they're all going to go into effect. And it looks like they're not going to be as bad as the market was previously expecting. Instead, we might be getting a significantly reduced batch of tariffs, which will be announced next week, and more could follow. But it's not going to be an overall kind of tariff thing. It's going to be specific to certain products. We have the Dow gaining 430 points on this news, or 1%. Broader S&P 500 rose 1.45%, and the Nasdaq, which crypto tends to follow quite closely, gained 1.9%. So this is so funny. So a lot of this has to do with the uncertainty that investors carry about these tariffs. What will be the scope and breadth of them? How much should we expect impacts to the economy? Therefore, perhaps creating some sort of recession that would steer investors away from risk assets and more to things like gold that have performed quite well recently, or even bonds, right? But it seems he's continually walked things back. So I'll share with you guys this section here from this article at the bottom on CNN.com to show you guys just how crazy this is and the kind of uncertainty that it creates, right? People are just like, we're realizing, okay, he's a businessman. He's threatening these things to try to get different countries to comply with him or to like bend the knee or whatever. But he does acknowledge that there will be real risks here to the economy, it seems. So Trump campaigned on steep tariffs on day one, but he failed to deliver on that promise. Instead, he signed several executive actions on his first day in office, ordering his administration to investigate. Instead of actually putting these tariffs, he wants to investigate whether to pursue these tariffs on his day one on a wide range of goods. He did, however, announce that 25% tariffs on Canada and Mexico would be coming February 1st. February 1st came, and rather than the promised tariffs, Trump said the tariffs would come February 4th. Then on the eve of their taking effect, Trump announced month-long delays on the Canadian and Mexican tariffs after both countries sent delegations to negotiate, offering minor increases to existing border security and promises to take more action to restrict fentanyl crossing into the United States, which we had covered on the show. Hey, thank you so much. I appreciate that, Josh, and I appreciate your thanks on your congratulations on the engagement. We're super happy about that. Thank you very much. Tariffs on China went into place on February 4th, but not at the 60% level Trump had promised in December. The 10% tariffs came with a surprising twist: the elimination of the de minimis exclusion, a loophole that allows goods valued at less than $800 to come over the border tax-free, duty-free. Those packages are numerous and onerous for customs officials to scan for tariffs. Imagine, you now have to scan every single package, not just packages that are valued over $800. It's going to take a lot more diligence for this, so very difficult to implement. The next day, the U.S. Postal Service stopped all package deliveries from China from entering the United States because it was unable to abide by the new trade policy. But hours later, the de minimis exclusion was back on temporarily until the Commerce Department could determine how to police it. AI. Then Trump promised a big one, as he called it, reciprocal tariffs. Instead, the plan, as it were, which Trump announced in the Oval Office on February 13th to much fanfare, consisted of a vaguely worded memo that offered few concrete details. Stocks surged that day, celebrated a tariff policy that appeared to be a lot of bark and no bite. On March 3rd, the 25% tariffs on Canada and Mexico went into effect for 3 days. On March 6th, Trump delayed all tariffs on its neighboring country. Anyway, you just see, it's just tariff, no tariff, tariff, huge tariffs, small tariffs. It's and then this is what has caused markets to become uncertain and to kind of freak out about what will be the impact. So I'm guessing that April 2nd will come and go as a big nothing burger. And the other thing that is potentially helping the markets is the Fed seemingly trying to find ways to inject liquidity into the markets. Yeah, they haven't lowered interest rates at their last meeting. They kept rates unchanged, expecting probably 2 more rate drops as we go through the year, which is better than what we heard. I believe it was Bank of America, some sort of executive, who was saying that they're expecting no more rate cuts, but it does seem that the Fed is expecting 2 more, looking at their expectations. Remember that chart that shows you what they're pretty much betting will happen. I don't think they're actually betting any actual money. But anyway, 2 more possible rate hikes it looks like. And rate drops. And before we get to those, they seem to be restricting their bond maturities and so on. They're allowing more and more bonds to get rolled off of their balance sheet, which also has an effect of injecting liquidity into the markets. It says right here, where is it? The central bank will now allow just $5 billion in maturing proceeds from treasuries to roll off each month, down from $25 billion. So a $20 billion change here with their program. However, it left a $35 billion cap on mortgage-backed securities unchanged, a level it has rarely hit since starting the process. The Fed Waller was the only dissenting vote for the Fed's move for this QT program. And you have Jamie Cox, managing partner for Harris Financial Group, saying the Fed indirectly cut rates today by taking action to reduce the pace of runoff of its Treasury holdings. The Fed has multiple things to consider in the balance of risks, and this move was one of the easiest choices. This paves the way for the Fed to eliminate runoff by summer, and with any luck, inflation data will be in place where reducing the federal funds rate will be the obvious choice. So once they get through this quantitative easing stuff, balance sheet bond stuff, then the next step is lowering rates, which we could be seeing going into summer. And yeah, I guess that would be what takes Bitcoin back over $100,000. Ethereum doubling its price, as you're hearing more and more from folks as we move toward June, towards the summer. So these could be some of the headwinds that could be made in that regard. Anyway, money printing. Michael Saylor has continued to buy Bitcoin. Today's is notable. His Bitcoin buy, and that's because he passed over 500,000 Bitcoin that have been acquired due to his pioneering efforts in the corporate treasury space, I guess you could call it. But they now own 2.4% of the Bitcoin supply. Does that make you guys happy? An average buy-in here of $84,529 per coin. And I believe that Strategy is up marginally, like 0.5% on the news today. But again, most stocks were up today following this tariff clarification that I won't be as bad as was expected. This is interesting. So Ethereum positioned to rally toward $3,400. Okay, maybe not doubling by June. Maybe we can keep hopes for that towards the end of the year. But anyway, what would take us to $3,400 from just breaking $2,000 has to do with this chart right here, which shows the support level. This goes way back, and it shows Ethereum at least 3 times previously. It looks more like 4 to me. 1, 2, 3, 4, and this potentially being the 5th time that it bounces off this long-term support zone and aims to hit that resistance zone up there. And that resistance zone would be around the $3,300 level, $3,400. I mean, you name it. So it really is interesting that we are getting this bounce today, because I would say it was an important day for this to happen. If it did not happen, we could have easily gone down to around $1,500 ETH, the next major level support this is calling around. Ted Pillows said ETH has retested its multi-year trendline support level since 2021. Ethereum has retested this level only thrice since 2022. So June 2022, November 2022, and March 2025. The last 2 times the market cycle bottomed, and I'm hoping this time won't be different. And those rallies were quite explosive, gains of over 2,000% and 360% when it hit those points. So we could be in for higher prices as we head towards the summer if this chart is to be trusted. Also, you have, again, different institutions like BlackRock continuing to accrue ETH at lower levels here. BlackRock's Biddle Fund now approximately holds $1.145 billion worth of Ether, up from around $990 million a week ago. To me, this signifies confidence in the asset class as well, that even though you're hearing a lot of fear, you're seeing fear in the market, you're seeing people talking about drying up liquidity, just so much, right? You still have BlackRock actively betting on this space above other things they could put their money into, right? So growing institutional confidence, I would say this is confidence vote for ETH. And yeah, look at these whales ticking things up. The latest on-chain data from Nansen shows that since March 12th, 2024, addresses holding 1,000 to 10,000 ETH have grown their holdings by 5.65%, while the 10,000 to 100,000 ETH cohort has risen by 28.73%. So this is how you see the rich get richer, because the rich buy the dips. They know when to make these purchases. And that's exactly what we're seeing right now. Is it seems that we have many who are noticing perhaps like a local bottom here, and they're trying to build up those portfolios to get ready for this eventual bloom, which just has happened time and time again. I'm not a bear over any 4-year, I guess you could call it, period. We'll see how this cycle plays out, right? I do feel like the 4-year cycle is dying out. It's changing. It's evolving into something new, and I wonder what that will look like in retrospect. Anyway, ETH, again, just bouncing here. And this is the daily chart on TradingView. If you look at this final candle over here, just keep in mind again that this is this is by month. So we are still at these support levels by the monthly. If we do end the month in the green, this would give even further strength to that chart that we just looked at back here. That we could see us ripping up into that $3,400 level. So we'll see what happens, guys. And the other chart I've shared a few times. It's one of the main ones people are looking at right now, just like we've had in the past. Plan B's charts and many other, I guess you could call them heroes in this space who have grown a name for themselves because of their technical analysis. People are actually looking at this kind of analysis, looking at the M2 Global Liquidity Index, talking about the total money really on bank accounts and other forms of currency, I guess you could call it, and equivalents. As you see M2 grow, the money supply grows. There's a lag between when that happens and when you see Bitcoin climb. And with money supply growing again, it could just be a matter of time before crypto begins following it up again. I do feel like this is the lifeboat. This is one of the best ways to hedge against inflation, which is just supreme right now. Germany, they just printed $50 billion, I believe it was. It's too bad they don't have any crypto, have no interest in crypto. It's like the East, like Europe, and how you're hearing about all these regulations against AI and cryptocurrencies. I do feel like in Europe, people are going to get left behind quite a bit. And I thought it would be the case here in the United States, but maybe at least for the next 4 years, due to the administration's public views on crypto and what they've done with their executive policies, we could easily be ahead here when it comes to things like AI, which probably our main rival is China, but they're not really rivaling us here with cryptocurrencies, although they may be getting ready to open that up again soon, like we've talked about in recent news. Anyway, lifeboat. Grab yourself some Bitcoin and sit pretty. So this is the big story that's been playing out for like a week right now, is folks really upset with crypto.com. And I think they're totally justifiable in feeling that way. And I have felt that way pretty much since the beginning when I started doing this show back when they were called Monaco. And you might remember their ICO, the Monaco card, and just what a scam that turned out to be. And we're going to look at that in a minute because I will have to read a post that covers this in detail. So you guys get an overall view of the picture here with what's going on with crypto.com. To me, it was just... Anyway, okay, let me not get into that. But yes, let's start off with this one. How can anyone justify this? Crypto.com user loses 13% of their funds to sell their crypto. Their position was up 15%. And considering the buy fee, they probably lost 20% in fees overall, which makes their 15% profit a trade net loss. $725.42 fee, taking advantage of beginner traders, folks who don't know what they're doing, where to get lower fees, charging a huge spread. So the price that they quote you when you buy something or sell an asset on crypto.com, very far removed from the spot price, which many other exchanges are closer to. So you're getting a terrible deal here on top of other fees besides the spread. So this guy, even in the profit, probably lost money with this trade that was up 14%. So you can see how people would be really, really upset by seeing this kind of trade happen. But beyond that, let's go even deeper here. So here's a thread I wanted to talk about. Chris, the CEO of Crypto.com, previously Monaco, claims Crypto.com is profitable and ran in a very efficient way, but doesn't say why they needed to print and give $5 billion in CRO, these Crypto.com tokens, to cover their future expenses. Meaning at best, Crypto.com scammed CRO holders, and at worst, Crypto.com is secretly insolvent. So yes, they printed a bunch of money, right? They hugely inflated this token that holders would hope wasn't inflationary, I guess. Maybe they should have bought Bitcoin or something else. But instead, they bought this like private token, and it's getting inflated, and they're very surprised and deeply upset. In response, Chris responds on X, Crypto.com generated $1.5 billion in revenue in 2024, and we currently have over 140 million users on the platform. The business is run in a very efficient way. After salaries and other OPEX, we have about $1 billion in gross profit to reinvest in the growth of the platform. Of that, user acquisition, user incentives, and branding cost us about $700 million last year, leaving us with net profit of $300 million from operations. As everyone else, we also benefited from appreciation of Bitcoin on our balance sheet, strengthening it to all-time high levels. And then Israel's like, wait, hold on, dude. This was about you printing money, not how much money you made last year, right? Chris, there is no clarity about the 70 billion crypto unburn, CRO unburn. No clarity at all. This is just telling us CRO holders that you guys at CDC have cash, but still choose to dilute our investment massively to get even more. That is beyond trolling at this point. It shows peak ignorance. Scam. Ouch. Yeah, absolutely. Way to politically dance around the accusations here. So here is the big thread that I want to show you guys. The first Crypto.com scam was worse than you realize. They stole over 99% of all tokens from Monaco holders. No, that's not a typo. They stole over 99% of CRO tokens. If you've been following the recent Crypto.com drama, and bear with me, guys, this is definitely something that you're going to want to hear about. You're going to have more and more friends and family interested in getting into cryptocurrency, and Crypto.com seems like a natural place to go. You have a stadium named after it in Los Angeles. They're Crypto.com, for crying out loud. They have to be safe, right? The regulators have been protecting us well, right? If you've been following the recent Crypto.com drama, you probably have heard of the first Crypto.com scam, the forced convert of tokens from Monaco to CRO before abandoning Monaco, their ICO token, entirely. You probably don't know just how bad the scam actually was, though, unless you guys were here with me, because we were covering it in real time. When Crypto.com forced a swap from Monaco to CRO, they gave Monaco holders less than 1% of the supply in the new token and gave over 99% of the supply to themselves. So imagine you create a new token, way higher supply, you hold 99% of the amount, and then you tell people, oh yeah, we're ditching the coin that you guys bought during the ICO, the MCO, the Monaco token. It's going to reward you for using this Monaco credit card or whatever, but you can convert it over into this new fancy CRO token where you're devalued by 99% and we hold the supply. It's insane. Before we go too deep, let's refresh how the scam went down for anyone not yet familiar. Before Crypto.com was Crypto.com, they were Monaco. Monaco raised $26 million in 2017 through an initial coin offering of ERC20 tokens, promising to launch crypto credit cards with big rewards. This went absolutely nowhere, and in 2018, the Monaco team pivoted and spent $12 million of their remaining funds to purchase the Crypto.com domain. They just bought the website, right? Renaming the Monaco token the Crypto.com token. And in 2020, the team abandoned this token altogether in favor of their newer token, which they had more control over, CRO, giving Monaco holders a limited amount of time. So get it now or you're going to miss out completely. Your token's going to be worthless because we're moving to this new shiny thing. Giving Monaco holders a limited amount of time to swap from Monaco to CRO. Now here's where things take a really dark turn. Monaco had a circulating supply of 31.587 million tokens, which can be confirmed with the Wayback Machine from 2019. The Monaco to CRO swap rate was 1 to 27.64. This swap rate can be confirmed from a now deleted August 2020 Crypto.com blog post pulled from the Wayback Machine. So trying to kind of hide their history as well, deleting old blog posts. Why? If you're so confident in yourselves. Please know that anyway, they showed a symbol here of what it looked like back then. If we do the math, 873.2 million CRO was set aside for Monaco holders if everyone claimed they didn't, and CRO has a total supply of 100 billion tokens. So we're seeing that basically 1% of the tokens were public. Less than 1% were public. 0.873% of CRO went to Monaco holders. 99.127% of CRO went to Crypto.com. If the regulators weren't all over this one, I mean, what credibility should they have had afterwards? Oh my God. Or, in other words, Crypto.com stole 99.1 0.27% of the supply of the new token from existing Monaco holders on the forced swap to CRO. Had Monaco holders been giving a proportionate amount of CRO based off their share they owned before the forced swap, Monaco holders would have been given 3,165.8 CRO for every one Monaco they own. Instead, they were given 27.6 if they claimed limited time only. Crypto.com stole over 99.1% of the new CRO token from Monaco holders and gave it to themselves. They then proceeded to dump that on Crypto.com credit card buyers as a way of raising even more money, offering rewards that Crypto.com knew wasn't sustainable. But that's a different story. Anyway, before Crypto.com, and this is a different post, this one's even more detailed, Insogo. So this is what he did before he got involved with Monaco, which we were detailing at length live. Before Crypto.com, Chris Marszalek was the CEO of Insogo, a Groupon copycat. If you don't know Groupon, it was a super popular app. I used it in Miami when I was living there, where you would get deals to go visit massages, restaurants, spas, activities like hot air balloons, whatever. You get a really good deal on that through the app. So they were a Groupon copycat that defrauded investors and third parties. Chris would resign as CEO and run away from the problem, ultimately leaving an insolvent company that cost everyone a lot of money. For some reason, you believe it couldn't be the same person. He showed a video here of Chris shilling how great Insogo is and how you should work for Insogo just 9 months before Insogo declared bankruptcy in June of 2016. He goes on, in this video, he talks about raising money, how much money he has raised as a way to look like he's credible. We got money from Goldman Sachs. They clearly do their homework, right? So throw your money at us. Just 11 months, Monaco, after Chris defrauded investors and users at Insogo, Chris was back with another not so revolutionary idea. Well, a copycat of another popular idea. Whereas Insogo attempted to compete with an established competitor, Groupon, Monaco attempted to be the first to get into the early budding field of crypto credit cards. Chris raised $26 million on an ICO for an ERC20 token called Monaco, with plans to launch a crypto credit card with special rewards for Monaco holders. Although plans for this would ultimately stall with no signs of success, Chris would pivot a year later, like we've talked about, and use his remaining reserves to buy the Crypto.com domain for $12 million. This would lead to Monaco being renamed Crypto.com token and then later being abandoned altogether for a new token called CRO. In 2020, Monaco holders were given a limited amount of time to exchange their MCO for CRO. Anyway, they raised a bunch of money off of this token basically to buy the Crypto.com domain after the fact, leaving a bunch of investors out on the streets, rug pulled. The Crypto.com credit card debate. After defrauding Monaco investors to buy the Crypto.com domain. What's up, Miles? What's up, Wendell? Thank you so much, man. After defrauding Monaco investors to buy the Crypto.com domain, Chris would eventually launch a crypto credit card, forcing credit card holders to buy CRO from Crypto.com and lock it up to get rewards for holding the credit card. Chris has repeated one of his tricks from his days at Insogo, offering rewards that are too good to be true to onboard new users, then pull those rewards and create unhappy users. For the Crypto.com credit card to work like this: sell your freshly minted CRO to users at no cost to yourself, right? Have them lock up their CRO for a year to get a credit card with great rewards, dripping the money that they gave you back to them. After a significant number of users are onboarded to pull those rewards, leave unhappy users to deal with the consequences. Many users purchased a credit card locking up hundreds of thousands of CRO to get rewards, had those rewards slashed, and a year later, the value of the token they locked up had lost 75 to 90% of its value, costing users thousands to hundreds of thousands of dollars. Part 1 doesn't cover many other sketchy things, fake giveaways, right? You don't even give the money out. Taking advantage of new crypto investors with gamified experiences that steal 15% of your money with spread every time you make a full trade. Part 2. So this is where, as we continue forward here to the latest in how people are so upset at this company. When Crypto.com first launched CRO, they minted 100 billion tokens before eventually burning 70 billion tokens in 2021 as a gimmick, and said the final supply was 30 billion. On March 2nd, 2025, just 4 years after the burn, CDC, Crypto.com, made a proposal to remint the 70 billion tokens that they had previously burned, and to give it to themselves without making it clear how it would be used. The proposal was put up as a democratic vote where nearly every user that wasn't Crypto.com rejected the proposal. CDC proceeded to wait until the day before closing voting closed to steamroll the proposal, with CDC controlling 48% of the voting power and only 70% of validators voting. This was all but guaranteed to pass, and CDC will be minting $70 billion in CRO, currently worth $5 billion, to give to themselves, devaluing existing CRO holders. And yet another attempt at manipulation. Immediately after CDC forced the remint of 70 billion tokens, they made another proposal to burn 50 million tokens, which they will surely pass for optics. So 50 million tokens is worth basically nothing when you look at the amount that they're printing here. So in other words, instead of minting 70 billion CRO, they're minting just 69.95 billion CRO. So they're not minting 70 billion. They're minting less than that. They're not minting $5.99. They're minting. I'm sorry. They're not minting $6. They're minting $5.99. I'm just giving an example there, a retail example. Chris was mostly silent to the backlash, but after a few days after the proposal went live, they would eventually make one of their only statements saying they needed to mint 70 billion tokens to create sustainable flows on the demand side. Building sustainable flows on the demand side is essential to long-term success in the altcoin market. Multiple irons in the fire on this front. People who do not agree that this is the right approach are free to vote and free to sell. We will stay laser focused on building towards new all-time highs. Or in other words, CRO needed 70 billion tokens so they could sell them to third parties for pure profit at no cost to themselves, diluting the value of existing CRO holders who may want to sell. An absolute garbage excuse for anyone who knows how crypto-on-demand alts actually work. This is completely contrary to what CDC said they would do in their white paper. Use exchange profits to purchase additional CRO, creating an ecosystem where exchange profits are redistributed to CRO holders. So some sort of like buyback program, and they've moved very far away from that. The question becomes, why is Crypto.com abandoning their white paper to scam CRO holders? The simple answer is CDC just wants to mint more rewards for their users at no cost themselves. But I think the truth is much darker. I think Crypto.com is likely secretly insolvent. And this is a theme that is widely becoming the forefront of consciousness in crypto, which is why I bring this whole story up right now. After FTX collapsed, CDC seemed like it would be another exchange to fall, given CDC's staking feature and similar business model to FTX. CDC survived a smaller exchange run and would eventually release an audit. This is gold. An audit in early December. But just days later, the firm that ran it said they weren't confident with the audits and would stop running them because they didn't show liabilities. According to Mazars, this is some sort of article from Investopedia.com snippet. According to Mazars, the proof of reserves report it has published so far have not been sufficient to assure markets. A proof of reserve allows centralized exchanges to publicly prove their solvency and attest to the value of the reserves. An email from the firm described intense media scrutiny as another concern. A Mazars spokesperson, I suppose they're the auditor, Mazar, said the suspension was limited to its provision of proof of reserves reports, citing concerns regarding the way these reports are understood by the public. It has been argued that proof of reserves reports are not comparable to full audits because they are limited to showing assets and not liabilities, and instead serve as snapshots that check out client information. So yeah, proof of reserves, how much crypto do they actually have in their addresses, but it doesn't show their debts, which is fair, I guess. That would be an important thing to see in an audit. But Crypto.com hasn't had an audit since they removed that audit back then. In fact, by the way, the community didn't like what was on there, right? Because they weren't discussing liability, so just pulled it completely. Haven't done an audit since. In fact, a post from a week ago asking why CDC hasn't had an audit since 2022 has since been deleted or removed from the Crypto.com subreddit. So they're manipulating their very own subreddit, which is, expected. You do see this on Reddit, so not much of a surprise, but not really good optics. Given the fact that CDC is not blowing up what's left of their reputation to mint $5 billion, it raises even more questions. Why would CDC blow up what's left of their reputation? And Sogo did not have a money printer feature to save the company that Chris could use to prevent the company from going under when he ran it into the ground. Crypto.com actually does. And we already know from Insogo that CDC leadership does not have a good track record with actually leading a company. One of the only things Chris has attempted to repeatedly respond to this since this drama began in early March is to aggressively assure users that CDC doesn't have any problems. We've heard this story before, Celsius, while continuing to ignore any questions asking for a firm plan of how CDC will use the 70 billion CRO that they're reminting. Completely false as Crypt. You can see him just spamming. Completely false. It's business as usual. Completely false. It's business as usual. Different user. Completely false. It's business as usual to a different user. Stop spreading falsehoods. People who tried to FUD us were all proven wrong many times over. If you have something to say, say it. If you stand by it, you should have no reason to hide behind an anonymous account. He has quite a history of being aggressive against detractors. Early on in my first hearing about him was when I was interested in Monaco, something like a card with rewards, and I had done a video about it. And then my buddy Box Mining, who still, I believe, does YouTube videos about crypto, this was back in 2017. He shared with me experiences. First, he shared his video from back in the day. From back then, about why this was probably a scam, talking about fake offices, for example, that Monaco, now Crypto.com, was putting up on their websites, teams that could not be verified, and the history with Insogo, before Chris actually called my buddy Box Michael and kind of like try to force him to meet him at a cafe near where he was living. Like, dude, Chris, how did you even know where he was living? It was kind of a scary situation. Imagine. Who knows what this guy is capable of. Anyway, Chris went out of his way to try and tell users that all these claims that CDC might be in trouble are just falsehoods, but they're using the emergency built-in money printer feature of their platform. They aren't releasing an audit, and their leadership has a bad history of running companies into the ground. And intimidating folks. So, in other words, if a homeowner has a long history of catching his prior homes on fire, he won't let you look at the home to verify it's not on fire. The homeowner is aggressively telling people that there is no fire. He's rushing loads of water to his home, and he isn't telling you why he needs the water. The house is probably on fire, and you probably want to get your money out of the house. That appears to be the state of CDC at the moment. There is no smoking gun because CDC isn't letting people see what's going on by refusing to do more audits. Although it's not guaranteed, everything points to CDC likely being at least partially insolvent. And until they release an audit, I think it's safe to assume they are. Don't trust, verify. If CDC have a hole, the other two things that might save CDC from going under in a bank run is their insane fees to take money from the platform. The fact that they encourage users to lock up their funds on the platform, which will hide the full extent of the damage by preventing many users from withdrawing during a bank run, probably will help save them in 2022 if they were insolvent. Who knows though? CDC has a plan to mint $5 billion and give it to themselves. If that works in a few years, they might be able to dig themselves out of any hole they may or may not currently be in. Yeah, they definitely have a money printer here, and they for sure. And IMHO have been using some sort of flywheel techniques to keep themselves solvent this long. I don't know how any user could use them long enough and not research alternative fee structures or spread structures and wonder how they can get a better deal. And they just stick to crypto.com because it has a nice fancy UI. And that's the dangers of having a nice user interface, is that you're going to get a lot of beginners into it. They're going to lose money and they're going to get disheartened here by crypto overall. And that's just the most innocent thing that could really happen going forward here. So I urge caution here. I urge awareness. Share this stuff with folks so that they don't use crypto.com. I have not used it, nor would I. I've only looked at the website basically, and it scares the crap out of me to lock up funds on that kind of platform. But let me know what you guys think about crypto.com. Are we completely wrong? Is this post completely wrong? Are we confusing the wrong Chris? Maybe we put a Z where it wasn't supposed to be. I don't know. Tell me, guys. So Tornado Cash is still down. So Tornado Cash token, Torn, is down 19.16% on a day when most cryptos are up. Why is this the case? Well, because Tornado Cash had actually rallied really strongly recently on news that their smart contracts, this Ethereum native, you could call it mixing service. It's not exactly a mixing service, but a way for folks to have more privacy and hide their balances and where balances are being spit and everything else out. They were sanctioned by the U.S. Treasury Department, and that has since been removed due to court orders. These sanctions, the Treasury said OFAC, the Office of Comptroller of the Currency, Office of Foreign Administration Consumption Comptroller, I don't know, OFAC, removed several dozen Tornado-affiliated smart contract addresses on the Ethereum blockchain from its sanctions list. And the token then climbed 60% on the news. So it would have been good to, I guess, buy this one here as we, I guess, get better regulation from new administrations. Following the March 21st ruling, however, and this ruling of it being removed from sanctions list, these smart contracts, several addresses that were linked to that, we are hearing from Paul Grewal over, I believe, Chief Legal Officer at Coinbase, who didn't agree with the exact way that this sentencing came out, not because they removed the sanctions, but because of the way that they worded this removal of sanctions for Tornado Cash doesn't make it so that they cannot be added again. It's very possible they could add them to the sanctions list in the future. So he wrote, power does not recede voluntarily. It gasps and gasps until it no longer can. After grudgingly delisting Tornado Cash, they now claim they've mooted any need for a final court judgment, but that's not the law, and they know it. So this is a textbook example of what's known as voluntary cessation, however you pronounce that, a legal principle where a defendant ends a contested action in an attempt to avoid an actual final court ruling. However, this only applies if there is clear assurance that the behavior will not recur. In Grewal's view, the Treasury has provided no such guarantee. So it's not good enough. And we will make this clear to the district court, said Grewal. So yes, he's definitely trying to get this more of a firm ruling here rather than having the defendants run away with their tails between their leg, only to maybe in future administrations add the Tornado Cash smart contracts back to the sanctions list. So yeah, way to dig a little bit deeper there, Mr. Grewal. Fidelity files for on-chain U.S. Treasury Fund. So more talk about more and more kinds of assets being tokenized, added to the blockchain. And in this particular situation, we're talking about Fidelity Investment, huge manager in the trillions of dollars, $5.8 trillion in assets under management, and how they are tokenizing one of their funds here. They're tokenizing the Treasury. They're creating the Fidelity Treasury Digital Fund that's going to be registered as on-chain. And that is going to be on the Ethereum blockchain, although they may be opening that up to other blockchains as we go forward here in coming months. And it's going to be a tokenized version of their US dollar money market fund. And it looks like it's been a huge past year for the U.S. Treasury market becoming tokenized, currently worth $4.77 billion, growing almost 500% over the last year, something we're also seeing from BlackRock. They've partnership. It says they have a partnership with digital asset firm Securitize, launching a similar tokenized T-bill fund last March called BIDL, which we talked about earlier in the video, and has become a market leader with nearly $1.5 billion of assets. So, yeah, it's just going to continue to grow here, these kinds of tokenized assets. And this is great. Like, it's forcing Wall Street. I think it was NASDAQ or the Dow Jones. I had read a story about how they're planning to have 24-hour stock trading here. Surely inspired by cryptocurrencies that do not close. So the U.S. has announced that they have seized $7 million of investment fraud proceeds, and they are trying to get that back over to victims who lost this money. According to court documents, the perpetrators, we don't know them named. We don't know exactly who they were, what their organizations were, but you've heard of this kind of scheme here, and it looks like at least some of them were caught. According to court documents, the perpetrators used social engineering to convince victims to invest in cryptocurrency using spoofed investment websites. The social engineering involved the perpetrators getting to know the victims and earning their trust before introducing them to cryptocurrency investment ideas through the spoofed websites. So maybe this is related to the pig butchering scams, where some sort of person pretends to be romantically interested in another, and this goes on for some time before promising to help the victim with investments and then maybe luring them over to one of these spoofed fake Coinbase websites. These websites were set up to mimic legitimate cryptocurrency investment platforms but funneled victim funds to the perpetrators through over 75 bank accounts in the names of shell companies. Imagine the investigative work here. Like, thank God for AI to trace through 75 shell companies' bank accounts. I gotta commend the law work here. I gotta say, these sites falsely represented to the victims that their investments were making sizable gains. They're seeing number go up. However, when victims would attempt to make withdrawals, the perpetrators would coerce the victims to send even more money using tactics such as claiming the victims owed taxes on their purported profits. And this dupes so many folks, so many people who don't have a proper investment experience or education, older folks, people who might not be able to think about details, people who have lower social intelligence, I guess you could call it. So many folks. So I want to get the word out there. And it looks like you can start reaching out if you were a victim at cryptofraud@uss.dhs.gov. And you might be due a share here of the $7 million if you were defrauded. So just be aware of that, guys. I hope that didn't happen to you. But if it did, there might be a little bit of recourse here. I don't know that it would be 100%, but something is something, right? This was a fascinating story as we begin to unwind here. Just briefly, you have Joseph Strange, who was Eminem's, the rapper's hip hopper, actor. You guys all know Slim Shady. He's standing up right now for himself because his old sound engineer basically took a bunch of his unreleased songs and sold them for $50,000 in Bitcoin. He was working in Eminem's studio in Ferndale, Michigan. And he sold 25 songs that were written by Eminem between 1999 and 2018. He had lost his job, which sucks, right? Lost his job in 2021 after working in the studio for 4 years. But he didn't have consent either from Eminem or Interscope Records, who owned the rights to these songs. And he has been charged. It looks like he's going to be facing potentially 10 years in prison for what's going on with these crimes. If convicted in one of the charges, he will seek, he said, justice and fairness in the courtroom. Yeah, they basically raided his home in January, and they found writing directly from Eminem. They linked it pretty much to the theft here from Eminem. But yeah, $50,000 for these songs didn't work out for him. There could have been better ways to bounce back from these lows, buddy, Mr. Strange. Anyway, crime doesn't pay. Houston crime. 4 teens charged in home invasion of online streamer. So I remember driving home from Vegas with my partner, with my fiance now, from Vegas after, I believe, a crypto conference. And we were driving back to LA and we saw this really cool car. I believe it was a Charger. It was black, souped up, passing us. And I looked at the license plate and it said Amaranth. And I was like, that looks like some sort of streamer. I think I've heard that name. And I believe it was this one right here, Amaranth, who is a popular Twitch streamer, popular OnlyFans content creator. And yeah, man, she has quite a history. But that I've seen some videos here on the YouTubes. If you haven't watched them, yeah, I guess she's lived kind of a rough life herself. But Caitlin Siragusa, aka Amaranth, seems to have been pistol whipped 3 times and demanded of cryptocurrency recently. 4 suspects aged between super young, 16 and 19 years old. Court documents have already been shared with Fox for 3 of the suspects who are being charged with aggravated kidnapping and aggravated robbery with a deadly weapon. Not too much detail in this particular article, but it says the 31-year-old Amaranth says she was asleep in her Northwest Houston home on March 2nd when 3 men, children, really, entered. Her husband, Nick Lee, was in the bathroom when she heard loud sounds beneath her bedroom. According to Siragusa, the men burst into the room and attacked her, then demanded cryptocurrency. The suspects also allegedly pistol whipped her 3 times. Siragusa says she eventually led the suspects to Lee, her husband, who fired shots at the suspects, potentially injuring one while they fled the scene. Wow. Again, another scary story. getting pistol whipped has been enough to kill folks with a strong enough strike to the face. So luckily they were children. I guess they got to go lift, bro. DeMarcus, Dylan, and Brian, y'all got to go lift, my guys. You'll have plenty of time probably in jail after this assault. Another, again, example of being careful here when you're a public figure around cryptocurrency, because you're frequently the target. She wasn't directly involved with crypto at all, but I'm sure she accepted it as forms of contribution for the various kind of content that she creates. So yeah, wanted to share that. And thank you guys so much for being here, and so happy to be back with you guys here with my fiance in the background. Thank you, Mo. Make OnlyFans videos. I might have to with how much money I make off this channel. Maybe we can start an OF, right? Any ideas? I'll show you mine my portfolio if you show me yours. Rob Groove, thank you so much. Rain Classic, man, missed you, buddy. Thank you. Jack Knife, thank you for making out. Bang Chief, and I see your names, and everyone else who made it out. Thank you very much. I'm so grateful to each and every one of you. Thank you so much for your Patreon support, for your YouTube sponsorship, Josh for your donation today, and all of you guys who tuned in while we start this new season of Crypto's News. Take care, guys. Much love. We'll see what tomorrow brings, and stay cryptic. Peace.